are live. Welcome, everybody. Thanks for being here with us. And Michelle, hi.
Hello.
It's nice
Let's
to
introduce-
nice to see you.
start off introducing ourselves for any that don't who haven't been here before. I'm Michelle Teheux. I write a Substack called Untrickled, which is about the fact that trickle down economics has not ever worked. And from there, I also kind of branch out a little bit into several different areas um, that have anything loosely to do with economic inequality. And Allison, I'll let you introduce what.
Yeah, and I'm Allison Tate, and I write Inheriting Inequality, which is about all of the things that we inherit and how inheritance helps create types of inequality. Some of them not so bad, and some of them extremely bad. And one of the things that I wrote about this week in a post from yesterday was actually a little bit of legal history. And I'm a law professor and about credit. So we thought we would talk about women, gender, and credit and the credit economy.
Well, I learned something when I read your piece, and see, the title of it was I'm sorry,
Mrs. Cardholder.
card holder.
Yeah.
And we are, I suspect, both old enough or young enough, actually, I should say, that we have always been able to get credit cards
Yeah.
from the time would qualify for them. But our mothers and grandmothers,
Hmm.
I'm sure my grandmother never had a credit. None of my grandmothers probably ever had a credit card, but
Hmm.
my mother had one. But I bet she couldn't have gotten one when she was a newlywed in 1960s.
Yeah. So I asked my mom the other day when I was writing the post. My mom always she always reads my posts before I publish them to tell me that they're too long and that I should put in more uh, periods and shorten my sentences. So and she was saying that when she was first married and they moved from Nebraska to Colorado, which is where I was born, that they both actually had a hard time getting credit because neither of them had any. My dad had been in law school and she had not worked, and so they both had a hard time getting credit. And that co-signing was very common at that point. And then she was trying to think of the when she actually got her first on her own credit card, and she couldn't think about it. And she said, I mean, she had got credit for the longest time. They just, my dad had an account, they had a joint account, or they both were on the same credit card. And it wasn't for a while that she got a credit card sort of in her own name. Um, I distinctly remember getting my own first credit card. Do you?
I don't. I remember getting turned down fresh out of college. My first husband and I were at some department store,
Mm,
and it'll say like set up for a credit card. So this would have been in 1987, 1988,
okay.
and credit cards might have been. I think the world was a little bit different with credit cards then because we thought, yeah, we should probably get a credit card, and
Yeah.
they're like, nope, you can't have one because we had just barely graduated and we didn't have a lot of money,
Mhm.
and we had jobs, they weren't making that much, and we just didn't have any credit history.
Yeah.
I'm not sure when we got our first one, but, I know that day it was kind of like, it kinda stung, like, "What do you mean I can't get a credit card?" And I
Right.
think shortly thereafter, they started handing out credit cards like candy on campuses.
I was gonna say that's how I got my first credit card. I remember very distinctly, it was at orientation when I got to college, and I, signed up for some classes, and I got, a mailbox, and then there was basically a table right there, and somebody said, "Do you want a credit card?" And I was like, "Yes, please." I was like, "This is wonderful." And I think we've already established that, like, I'm the spender in the group here. So I, like, took my credit card and I went to, like, a women's college right outside of Philadelphia. I went right down a couple towns down, and they had a shopping area, and I went into the Laura Ashley store, and I bought myself this, like, velvet dress because, like, I mean, that's exactly what you need as your,
That's hey,
first
I mean,
student, right?
what else do you wear as a college freshman is a
I was
velvet.
so excited to have a credit card and so excited to have credit that I went down there. I mean, I think my limit was, something like $500. And I'm sure I spent a good bit of it just on the dress, but I was just so excited. And now that I think about it, I think, what were they doing handing out credit cards to first year students without cosigners, anything? They were just handing, like you said, handing them out like candy.
For the same reason that the drug dealer will maybe give you a little bit of drugs,
Yeah.
initially.
Yeah.
A
It worked. It did
lot
work.
I don't know where all these drug dealers were when I was young. None of them came up to me and offered drugs, but I wasn't offered drugs. I wasn't offered credit cards.
Right.
None of this was fair. But
Gosh, I got all of those. Yeah, so it is interesting that there was such a switch in terms of just handing them out to students. You know, it was not it was barely 20 years after 1974, which was the Equal Credit Opportunity Act, which, basically, prohibited lenders from discriminating based on these protected categories. So the first one was gender. 1976, they added race. And also marital status and, 2 or 3 other protected factors, but that was 1974 to 1976, so it's amazing the change in the credit industry, and you were just saying, our grandparents, grandmothers, most people so revolving credit cards weren't introduced until 1958.
Hmm.
Which seems really like not that long ago also, but before that, people had store charges. So you might have had a Sears credit card or, a charge at a store. So there was a lot of store-based credit, but
And
revolving credit was pretty new in the 1960s, and people were very skeptical of it. The cards that people had up until that point were again either store-based or Diners Club had been pretty successful. So some people had a Diners Club, but you paid every month, and
I
the
I people got
Maxes paid every month.
I think people have gotten over that skepticism of credit.
Yeah, you sure have. I mean, that's one of the things I kinda tracked in my post, the growth of revolving credit, and, it used to be in 1974 when the act was passed, it was about 6% of all consumer credit, and now it's, 30% of all consumer credit. So it's a
Uh,
huge, huge part of consumer credit at this point, and people have absolutely embraced, revolving credit, but it wasn't obvious that they would. It was not something that people now absolutely jumped at the chance to have when it was new, which is interesting because now we think of most credit as revolving credit, and people don't think of store credit anymore.
well, I remember again, as a young adult, anytime I was at a store and they'd say, "Do you wanna sign up for a credit card, get
Yeah,
10% off?" I always said yes at first,
yeah,
and yeah, I'll pay it off right away, but I'll get this discount, and then I found out later, like, they don't really like you to have 50 different, department store credit cards, so I over time, I got rid of all of those and
yeah,
stuck, just 1 or 2, your basic Mastercard, Visa, Discover, or different ones,
yeah.
but
And those used to be the big Sears was one of the first stores to adopt a store-based card. I think Sears started in, like, 1913.
mm,
Uh, but even before, in the 19th century, you didn't actually actual cards, which at first I think they called them charge-a-plates, and, you didn't have those, but you had credit with local stores, and it's actually interesting because in terms of what we're talking about with gender, because women were the ones who went out and did the shopping, and they were the ones who sort of negotiated credit with all of the local grocer or, the person down the street. So
you would
but
have a
somebody
account
says
with
Mervyn's was my first. Yeah, the Mervyn's card.
people
They had those out. I had a Mervyn's card too.
I know people used to have an account with the butcher and the
Mhm.
baker and everybody, and they just paid it, when they had it, but
Yeah,
people would I notice, like, in old movies or old books, they'll talk about, the butcher's not gonna give or the milkman's not gonna give them any more credit if they don't
mhm.
pay.
Yeah, it's interesting. I don't know if anybody out there is like a French literature fan, but the Zola book Germinal, the baker, he gets castrated by the women in the village because he stops extending credit. So, bad things happen.
Well, one thing that credit does is that, if you've this just occurred to me that if you had an account with your butcher or baker or somebody and you didn't pay it, that store owner was just on the hook. But
Mhm.
if you have a credit card, the store gets their money right away,
Yeah,
and credit card company that is on the hook to make sure you pay up. So
yeah.
that's one reason, that probably made it a lot more popular. 'Cause you're not gonna give credit to somebody that you're not pretty sure is going
Yeah. And this is interesting too. I think that's the other interesting there's so many interesting things about credit, but one of them is that with the growth of credit also came the growth of credit scoring and surveillance. And
yeah,
this entire industry of people being, again, surveilled by their neighbors and by data, but the idea that, there's so much out there to know about and that lenders want to know all these things about you. And it used to be very local and very personal.
mhm,
Benjamin Franklin had advice about how you should behave in order to get money from your, neighborhood lender. And, you had, little writings that said, "Don't let them see you, out at the pub. Make sure they see you working hard, and then they'll make sure, then you're gonna get more credit from them." And, now it's transformed into, right, algorithms and, credit scores look a lot different, but there's always been, as long as there's been lenders, there's been the worry about how do we know we're lending to the right people, and a lot of it has been it used to be reputation based, and now we have the algorithm problems.
Well, because I can guarantee you Visa knows nothing about what my daily habits are. I mean, they know when I make purchases and things, but they don't know on any given day, am I just lazing around getting drunk or am I have my nose to the grindstone? They don't know.
Yeah.
So, uh,
And they don't really care as long as you pay your bill as you pay your bills on time. Like, they look at length of credit, so how old your credit accounts are. They look at your monthly, payments that you pay on time and you pay the minimum amount. They look at, like, a few factors, but as long as you pay on time and as long as you, again, keep your credit cards open, keep keep spending on them and keep paying on them, they don't really care other than that.
one thing I think a lot of people don't realize is that it doesn't necessarily your credit score doesn't have a whole lot to do. I'm sure it has something to do with how much you make, but you can be poor and have great credit. You can be rich and have lousy credit.
I think that I and when you had mentioned that, you said, that you have a great credit score, which is
My credit score virtually couldn't be better.
uh,
The looked 'cause on my Discover bill,
yeah,
uh, they give you your credit score every time, and it is the highest 850, I think.
I think yeah, I think that's right.
Whatever it is, I'm like 3 the last time I looked, I was 3 points away from perfection.
Wow. That is I mean, that's always just nice to say I'm 3 points away from perfection. It is interesting though, because it is true that there's actually sort of a luxury status of not caring about your credit score. If you have a whole lot of money, you can find yourself in the spot where you don't actually care if you have bad credit because you can afford to buy things with cash. And also, banks will lend you money based on your assets that you can collateralize. You can do asset backed lending, securities backed lending, and people will give you money if you put up some stocks as collateral. I have all of these cases. It's so funny. I had this one case that I make students read, and it's about a couple who gets divorced, but they live on trust fund income from one of the spouses. And, they get something like $60,000 a month from the trust.
Hmm,
And the court points out repeatedly what terrible credit the guy had.
what does he care?
Yeah, yeah, it's like, who cares? He doesn't care, right? He gets $60,000 a month from this trust, and that when they financed a car once, I don't know why, and they used the wife's credit because she had good credit, and the court says over and over again what terrible credit he had, but he didn't need it. So it is interesting the difference that credit score makes at different levels of income and wealth.
Well, for certain jobs, they check your credit score, which
Yeah.
but unfair because if you've been unemployed, you might have, had to live on your credit cards for a while.
Hmm.
My mom applied for a job at some point in the early '80s, and one of the questions they had was that they if everybody applying is like, "Could you write a check for" I don't remember the exact amount, "today?"
Yeah.
And they wanted to know that you could do that. If you'd said, "No, I'm kinda broke, that's why I'm hoping to get this job," you wouldn't have gotten the job.
Hence why I'm seeking gainful employment, right?
I'm applying for a job, but I have no need of one whatsoever, I'm loaded.
Right. It is something, and it did start happening, I think, in about the 1980s when the credit scoring industry got, so big, and it got very consolidated too into basically the three credit scoring agencies we have today. It used to be there were 10, then there were five, and now we basically have three major credit scoring agencies. And
And
they
you
started using credit scores for all kinds of things, right? To get your electricity turned on, they run a credit. To
and
rent an apartment, you get a credit check. Employers use it. So
I have your cat's opinion on credit.
yeah, he's a spender too. Yes. Oh.
Oh.
He's like, "I have lots of passive income." Passive income. It's like there's
I
nothing I have about
I
like, I have a driver, a chef, and a and a large form of passive income.
why wouldn't our dogs and cats think that we're subservient? I mean, we
Right. He's like, "I have a pet trust, it's fine." Um, But it is a little terrifying to think of the number of ways in which credit scores are used for things that really, like you said, impact people's ability to earn and to live. If you get denied housing because they ran a credit check
Mm.
and you have a bad credit score, that's really problematic.
Well, so I've mentioned before, the house I live in, with the time we bought it in 2008, I was unable to sell the house that I'd lived in previously because it was 2008. I was gonna have to sell it at a huge, way less than I thought it was worth. And so I began renting it out, and I rented it out until, thank God, my son, as a young adult, decided he wanted to rent it. So he's a completely reliable renter that always pays on time and never trashes anything, etcetera. But even though I did background checks, oh my god, I would never I would if my son ever wants to move, I'm selling that house the day after he moves out because it's terrible to rent out a house, and I would always check, and, no matter what I did as far as background, sooner or later, they would not they would not have enough money to pay their rent, and they would treat me as their lender. And the most memorable time, it was when my daughter was getting married. This is, like, 13 years ago.
Mhm.
She was gonna get married on June 1st, and I said, "Hey, where's the rent?" They said, "Well, our son's getting married on June 1st, and we kind of need the money for the wedding." I said they probably didn't believe me. I'm like, "Well, my daughter's getting married on June 1st, and I was planning on using some of the rent money toward her wedding."
Right.
And I can't you can go and see a lawyer and do all these things, but, unless it's a really large amount of money we're talking about,
Mhm.
you're not gonna win. It's better to just work with them a little bit and then try to get them out of there because it's
Yeah.
too
I
hard.
mean, that's an interesting point also in the sense of, like, how people use families and sort of the family economy as well because, people there's been a lot of writing about people still getting money from their parents and the bank of mom and dad and the way that money works within families, and a lot of times family is the place where people go because they don't have the credit score to go and get formal credit from a bank. They can't get a line of credit from a bank. They might not be able to get a credit card. If they're not working, they might not be able to use payday lending, and so they use the family as a source of a lending, and
Which
that's not uncommon.
if your family dynamics are good and healthy, that's the best way. If you have a family you can count on and they can count on you, because yeah, sometimes you don't have any credit and you're going through a rough patch. And if you've got someone you can depend upon that's willing to float you a loan or give you money to get
Mhm.
you patch, um, and you hear all the time though about families that one member of the family takes advantage of the other. And so you kind of have to really know which type of family you're in. But yeah, I would not hesitate to bail my kids out if it were something I had the ability to do. And I know vice versa. The truth is also the truth.
Right.
And
And
especially,
like you said, the benefit of lending within the family is that also you're not gonna report your son to the to credit scoring, but agencies if he doesn't pay his rent, right? You're not gonna suffer the same consequences. Uh,
you know what? That reminds me of a story. Before my son was renting where I rent, when he was renting with some roommates, and one by one, all the different roommates moved out until it was just him and this other guy, and they were having trouble making the rent. And because my son was from when the time he was a teenager, we had our bank accounts at the same institution, a local credit union, and they were hooked together so that I could transfer money into either of my children's accounts, when they were away from home or something like that, if necessary. And it just, plus they were minors when I opened the account, so they were hooked in. And my daughter had long since moved away and decoupled our bank accounts, but my son we just never had. We live in the same town, we go to the same bank, and we didn't think anything of it really. I could see his business, but there's nothing there to see. He can't see my business just because of however they set it up. But at one point, and I found this out afterward, he told me that he was like really getting close to the edge,
mm,
and he went to the bank and he was, concerned about everything. And
mhm,
they said, "Well, if you don't pay, we'll take it out of your mom's account."
mm,
And I was so worried about oh my God, if they take money, mom's going to know that I'm in trouble.
right.
Know I'm broke. He went through some pretty major acrobatics to make sure I would never know how
Yeah.
much sort of money he was, and God forbid that none of it would come out of my account. He told me this way later, and of course, I'm like, "Why didn't you just tell me? I would have
Right.
had a problem with helping." Oh my god. He did not want me to know.
Yeah.
But if you do have your, accounts hooked up like this, which I think is pretty common when you've got
Mhm.
a young that, they have to be hooked up, they're a minor, but then when they're as soon as they're able to get the bank account on their own, they should do that.
Yeah.
And that's that Zach and I still have not done this.
Yeah.
We keep saying we're gonna do that, but we
Yeah.
just haven't.
Well, it
We're
points out, it points to another thing that we sort of mentioned right at the beginning in terms of parents doing a lot to get first credit for people when they're starting out for their kids, right? By co-signing, co-signing a mortgage, but also co-signing cards and providing that type of financial guarantee for people to get credit. Because at this point, and this is something that I think is an interesting but problematic feature is that you sort of have to have credit at this point. It's a basic feature sort of economic citizenship is having credit. You have to have this good credit score and you need credit and available credit and access to credit is so important that you turn to parents, you turn to other people, but it's something that we assume that people have and that people need too, right? Because they don't have other ways to finance things.
I think that one thing that people don't realize is that, there are ways to improve your credit without really changing how much money is going in or out of your household, and I am not an expert on this, I'm not someone to take, financial advice from, but a friend of mine who had, a lot better financial situation than mine happened to ask me, like, "What can I do?" Because I don't really have credit because she didn't really use credit.
Yeah.
Said, "Get whatever credit card, put all the groceries, all the gas, any restaurant, put everything on the credit card
Mhm.
and off in total every single month, and that should do it."
Mhm.
And sure enough, she did that, and I don't think it took very long, and she, like, publicly lauded me on Facebook, like,
Really.
$1,000, and it worked for me, and now my credit score went from
Yeah.
this to this, and I was able to get whatever it was she was
Yeah.
worried a home loan or something. But, yeah, I mean, she was still spending the same amount of money on her
Yeah.
gas and everything. She just ran it through a credit card first.
So this I think is interesting too because I think credit scoring is basically put out there as a type of way to be socially mobile, but also to sort of prove your worth, right? Like, okay, you proved your worth, now you get more credit. It's like, okay, great, thanks. Like now I can borrow more and be more in debt. So there's a problem part of it that it's a system where people by performing well, they just basically get they get the opportunity to be more in debt. There's also the fact that credit cards have gamified it, right? In the sense that people try to do these things to make their credit score better. But also, I mean, a lot of people do that because they want points on a credit card, right?
Yeah,
And there's like so much. I mean, I can't tell you like the number of Instagram things I get for how to game points and how to do how to like win at the point system. And people have so many credit cards. It's been this boon for the credit industry to have different benefits associated with different cards. And you might use this card to buy uh for airline travel because it's your Delta card. And then you get Delta points. And then you use another one for something else. But it's really I mean, the gamification of points is its own entire industry. I don't know.
I have a Discover card that I purposely got. I know exactly when I got this. This is
Mhm.
my, like, go-to card. It was when my first marriage was ending, and I realized I better get this taken care of, so, I think we had had a similar account together, and I, like, just made sure I got one that was just in my name during that process of all that stuff going on, and so I've kept it ever since, and that's been, like, well, since 2002, so, it's a pretty long-lived card, which I think also, gives me a little bit of a boost.
Yeah.
Not everybody takes Discover, so I recently got, a Visa card. My bank, for whatever reason, only does MasterCard, and there's a handful of times when, for some reason, a MasterCard isn't good enough. There's a
Mhm.
couple places where I need to use my card that, they only take Visa for whatever reason, so, like, "Alright, fine, I'll get a Visa," and, one site that I find very useful is NerdWallet.
Mhm.
Give them
Yeah.
a shot. I went to NerdWallet, and I saw what credit cards they recommend because they had already done all the
Mm.
footwork, and I took, like, one of their top, cards, but they did rate according to whether or not there's an annual fee, what their interest rate was, and the interest rate is immaterial to me because short of a total absolute financial devastation, I try to never pay
Pretty much.
Or,
Now, do you look at things like do you look at, like, 2 points for dining or 5 points for dining, or do you look at any of the points stuff? Does that make a difference to you?
um, not too much because that type of stuff just drives me insane. So
Uh,
I wanna know that I'm getting something for it. Uh,
yeah,
I'm probably just gonna use this Visa card for this one particular place that I have been making some purchases from that
yeah.
seem they take Visa or they take crazy stuff like crypto, but they don't take Discover, and my,
Right. Like, you take crypto but not Discover. Okay.
yeah, yeah,
Yeah. Yeah.
but, my insurance agent that, my house and cars are with, they don't take Discover, so I
Yeah, a
would
lot
need
of places don't take Discover, it's true.
yeah.
Yeah.
Well, and, not that we've been to Europe for a long time, but when we do go to Europe, nobody takes Discover there, which
No, I don't. Yeah.
I didn't realize that the first time I went,
Yeah.
and I needed money. I ended up the only thing I could figure out to do was, to go to a train station,
Mm.
and somehow or other at this train station, I was able to get money from I don't even remember how I did it. It was something really ingenious, but, 'cause I didn't take that much cash with me thinking I was gonna just use my credit card. Like, "What do
Mhm.
you mean nobody takes Discover?"
Right.
I found a way to do it either using Discover or going straight to my bank, but the only place I could do it was at the train station. So, anyway, I learned my lesson, like, either take cash and have a backup credit card.
Yeah. So it's interesting. I guess one of the questions is sort of how much the credit market can bear in terms of the ways that it's become again specialized in the way that people get all of these cards for different purposes. I'm curious if people in the comments have any thoughts on if they are interested in if there are other people out there like me who are like get to have a lot of cards for different purposes, but there's only again there's a limit, right? There's a limit to how many cards you want to have. There's a limit to how many cards you're going to have before you are going to start getting penalized because the at first there was just this drive to get everybody into revolving credit, but then there was a drive to basically to section the market, right? To like fragment the market and market differently to different people. So, I mean, like we talked about the pink card for women, like you could have a pink card and, now you can have all these branded cards, right? You can have a Delta card, you can have a Hilton Honors card. So, all of these different ways of branding. I mean, you can get cards through your alumni association, right? Like I've had so many different forms of cards. And it's an interesting question how many people are willing to have and how many different varieties of these cards can actually be, useful. There's gotta be a limit at some point.
I feel like I've got everything I need now with the Discover that's like day-to-day go-to, a Mastercard for, I think I have to use the Mastercard at Costco, and
Mhm.
Visa, one website that has a very weird stuff going on, I don't know. I'm not gonna use crypto. So, I got a Visa. It's
Yeah.
probably handy to have it for when we go to Europe if we ever get to do that again. But, a friend of mine is a master at, the frequent flyer miles.
Mhm.
He has so many frequent flyer miles that, he's been known to give them away. He
Mhm.
let an old girlfriend of his he let her adult son take a trip to South America. He's just like, "Here you go."
Yeah.
Because he has so many, and, because he wanted to visit Germany, he'd lived in Germany for a while, when his dad had some sort of academic thing going on over there, and he wanted to go see where he'd gone to grade school in Germany, and so we were at this is the last time we went, it was 2017, so it's been a while, but our friend was like, "Well, I'd really like to go to see
Yeah.
what's up in Germany," and we were gonna go, of course, the other's family is. So he's like, "I'll pay for everybody's airfare if you'll just pay there's a few little fees for baggage and taxes or whatever. You guys pay that. I've got all these miles. We'll all go together." And then, the deal was he would stay with, my husband's family and, be a part of the group where we drive around. All went to see all the sites you remember from his truck. It was a great deal for everybody. He got
Yeah.
to have a more authentic European experience, and we had free airfare, and, he never missed those points because he has a bajillion points. He's like the Elon Musk of airline miles.
And yeah, someone says, I have a lot of cards, but unless you spend tens of thousands of dollars a year, the points game isn't really rigged in our favor." And I think that's true, right? I think the points is just this way that that cards draw you in, and also that they justify the really high fees. So now credit cards don't make any money off of people like you, sadly, right? Like you are not their profit center. People who revolve the credit, right, are profit centers, but also a lot of people don't, and so they have to get the annual fees as well. And so, right, you have these very high annual fee cards, it's like $600 or $1,000 or, you know,
That
the
sounds
elusive most elusive card out there, the Amex Centurion, I think it's now supposed to be like a $15,000 or $20,000 initiation fee, and then a $5,000, annual fee. But apparently, they'll come rescue you off of an island and do whatever. I mean, you can buy anything with that card. But it is, I think, right, you have to it's not rigged in the consumer's favor, and that's why I think there's so many advice outlets out there about how to try, but you really have to make an effort. I mean, you have to, like, spend a lot of money. And I mean, like you said, you have to do things like put all of your expenses every month on the credit card or, put big purchases. Actually, did you don't you can't do this anymore, but I did have a friend, like, years ago who every semester would put his law school tuition payment on the credit card, and
oh,
got just 100, like, so many points. It was always worth a good trip somewhere, but you have to really, make an effort for it to be successful. But it is a way I think it is a way that the credit card companies bring more people in, and they keep people using the cards, and, even if you think you're gonna pay it all off, you might not just 1 month, and so they keep getting payments, and they keep getting the annual fees, so,
well, this
yeah.
is a thrifty way of doing it because I'm pretty open about the fact that, I don't have a ton of money. So it bothers me a lot to ever pay anything in interest. I can't stand to pay interest. I can't stand to pay annual fees. So there have been times in my life when I haven't been able to do as much as I'd like. There have been times I've carried small amounts of debt, but that I can't sleep at night if I've got debt. So not only do I always choose a credit card that does not, have an annual fee, but I arrange for it to be paid off automatically on the due date. I hook up my bank account to it, and that way, it's automatic. Now, that only works if you're the type of person like me who, doesn't go crazy with a credit card. If you're some people go crazy with a credit card. They know who they are. This method will not work for them. But if you are really careful about money, whether it's plastic, cash, or whatever, then this is a way I make money on my Discover card. I get a little bit of cash back, and, I have mine hooked up to my Amazon account. Yes, I know Amazon's evil, but sometimes that is the only place I can get anything because of where I live. I would have to do without
And cast iron pan, did that come?
it. I had to order a different one. They canceled it.
Oh,
I got
no.
also and it made very good bread, very happy with it.
Yeah.
It made
Yeah. I mean, I do wanna point out, you said that if you manage your money well, and, if you're fiscally conservative and you manage your money well, like, you'll pay everything at the end of every month. But that's also, I do think there are cases, and this is why these high interest rate credit cards and payday lenders, like, thrive, because there are people who work hard, try to pay their bills, try to pay everything, but then they have something like a medical emergency, right?
yeah.
Or their car breaks down or something like that, and they have to go to these lenders that have really, really high interest rates. And most of the time, it's not because they were irresponsible with money. It's just that there was an emergency that happened. And, I mean, Elizabeth Warren has taught us all we're like one medical emergency away from bankruptcy.
Oh, yeah.
And so a lot of times I do think, a lot of the people who get into really difficult situations with credit are the people who had the least amount of security, in the first place, who didn't have the financial buffer or a family member who could help them. And so they went and they got, they're targeted, right? These people, like, are targeted by the credit cards. So they get a thing in the mail that says, "Hey, here's a new card. Go out and use it," right? And they do, and they don't read the fine print that it's 100% interest, annual percentage rate. They don't read the late fee, they don't read any of these things because it's in 6-point font, and they use it and they think, "Great, this is wonderful. I can actually go to the dentist now, or I can actually get my car fixed." And then they get caught in this cycle because these predatory lending, companies and the predatory credit cards are just they have a system for taking advantage of people who are in the most precarious economic situations.
They are basically when you see a movie where the mob comes in and, demands protection money, and if you don't have it, they break your kneecaps or set your store on fire. I consider these predatory lenders to be about this
Yeah,
much, above those people. Like, the only thing they don't do is come murder you or break your kneecaps, but
yeah. And
they
then
a
yeah.
lot.
And we don't regulate them, right? I mean, some states regulate, that's all state-based mostly, but we don't regulate them a lot, and some states don't regulate them at all, and they can payday lenders can charge up to 600% interest rates, and, when you think of the fact that, you don't pay that, and certainly there are people who are extremely rich who get flyers in the mail that say, 0.1% interest on any spring purchase you wanna make, and then we have people who are paying 600% interest, and
And they're never the
yeah,
people.
and, like, just on things that usually that people need to live. It's not that they went out and bought something extravagant. It's just like, "No, I actually wanted to go to the dentist or get my car fixed," and
One of the things that I always say is that, stop telling people who don't have enough money that they just need to be better with their money. Sometimes that's true, but the idea that, like, people would get into financial trouble because they're blowing it, sometimes that's true, but I've never gone into debt for a luxury. Every single time in my life that I have had to, like, tap credit that I expect to just pay off, like, every month like now, but, like, borrowing money for something big, it's always been for a necessity.
Mhm.
It's things like, you have to spend money because your car
Yeah,
is that they're not gonna fix it free, and
yeah.
it's not something where if you are still at the point where you not haven't built up an emergency fund, or if this exceeds your emergency fund,
Or
it's
you
not.
had another emergency and you used it on your first emergency, and now you're having a second emergency, and
Yeah,
it's you know,
yeah,
shame on you for having a second emergency, right?
yeah, it's like some
Yeah.
people just don't have enough money, and our system preys on them. I mean, the
Mhm.
poor, you think how much money could there be in fleecing the poor? There's a lot of money
A
in
huge amount of money. There's an enormous amount of money. And I guess this is one of the things that I was one of the things that I kind of put in the post from yesterday, but it is no coincidence that when there was this expansion of credit rights and that all of a sudden people who hadn't had access to formal credit before had access to formal credit, like we gave people credit instead of giving them health care, right? Like,
Yeah,
yeah,
I have
it's
this book
that's
here.
a
Have
great book. Yes.
you read it as well?
Yeah, it's great.
Poverty by America by
Mhm.
Matt. He won a Pulitzer Prize for Evicted, which I haven't read. It's on my
Oh, you would love it. Both books I give a 5 star. Like, read
so,
them.
yeah, um,
Mm. Matt Desmond, great author. And he talked a lot about this dual system, right? The dual
yeah,
system we have for people who are living sort of in and around poverty and systems that we have for people who are living with wealth, and how really different they are, and like you said, how much money there is to be made in other people's poverty, and I think
oh,
credit those examples, right, where it's really an extractive system, and there are people who are making huge amount of money off of other people's,
yeah,
debt.
and th to the point of it's the people who can least afford it that get taken advantage of the most. I used to have this, very wealthy very, very, very wealthy friend, someone who'd never had to work for a living at all, very, very wealthy, lots of generational wealth, and she was very careless with her money because she didn't she was careless with money the way you might be careless with your running water.
Right.
And it's like, there's always more, who cares? And so at one point, she kept, like, running her accounts over because she did have credit limits. I can see why her mother, who had the real money, put money credits on her or credit limits on her. But, she said, "Well, it's no problem." She said, "If you, I don't worry about it." She said, "If I accidentally draw an account," I mean, she's like, "I do it all the time. I just call up and like, oh, hey, I accidentally,
Right.
for my account, can you take the fees off?" And she's like, "They'll do it. They'll do it every time." I'm like, "They'll
Yeah.
do it for you because your family has a bajillion dollars invested with them. They're not gonna do it for the single mom who accidentally spent too much
Right.
or
Yeah.
they
So
they
there's a comment in the chat, and this is absolutely right. Someone says, "As a former bank manager and lending officer, I've seen how one return payment can trigger a cascade." Right? Each new resubmission and every other item hitting the account racks up the $35 overdraft fee. The payday lender's rapaciousness becomes the bank's profit, and it's that triggering event, right? You bounce one check or one thing gets returned, and then you get these fees, and you start getting the fees, and you can't pay it,
and you
and
think
someone
you
says
really
this would have the same impact on someone with a cushion, right? Exactly, but can really severely damage a poor person. And I do think this is a whole nother topic. Well, it's related, but this is why so many people are unbanked or underbanked, right? People don't trust the institution because they're like, "Look, I'm gonna be charged these fees. I don't know if I'm gonna have enough to cover everything that's gonna come through, and I don't wanna trigger exactly what someone was talking about, right? I don't wanna trigger that cascade of events where I end up getting charged hundreds of dollars in return and overdraft fees, and so I'm gonna not bank. I'm not gonna put all my
Put
money
in
in
a
the account. I'm gonna do my banking differently."
Let me put in a plug for credit unions. I do
Yes.
every bit of banking I can do, I do at a credit union. There's some things I have to use a bank for the house that my son is living in that I still have a little tiny bit of mortgage left on. I had to use a regular bank for that for some law. That's fine. But I had when I had a mortgage on my house I live in, I had it in a credit union. Not only do where all my checking and everything is free, but
Mhm.
usually a pretty competitive interest rate if you're buying a car or something.
Yeah.
Not only that, but I don't know about all of them, but mine offers what they call the extraordinary dividend every
Mm.
usually
Oh,
in
that's nice.
right in time for Christmas. And at the time that I was financing my house and various other things, sometimes that could be several $100s.
Mhm.
It was like 19 bucks or something because I paid off my mortgage. That's fine. But you don't get that from a bank too often.
Yep.
And that, but they not because they're basically a nonprofit entity, they do a lot of things different than the bank. Like the bank that I have my, other mortgage through, I hate dealing with them. It's a
Yeah.
union is way better. And the other thing about it that I don't know if this is always available, but you tell me, but mine is set up so that if I accidentally overspend on my checking account, they will just take it from my savings account automatically, and they'll charge some little fee like $2, $5, something.
Mhm.
You don't get dinged. The whoever you
Yeah, yeah.
flash debit card, they don't even know it happened. The bank is just like, "We'll take it from your savings."
Yeah. Yeah,
I don't
there's a lot of support for credit unions in the chat. Credit unions are the best, and yes, credit unions have charters, that amount to profit sharing dividends with their members. So I think credit unions are great. We used to have more variety in terms of financial institutions, but we still have credit unions. And, there's some forms of community banks, I think, that, that deserve some shout outs. I was gonna say deserve credit, no pun intended. And other forms of banks that are trying to look out for the community, and that are trying to, act specifically differently than the payday lenders do, and the fee harvesting credit cards,
oh,
because they do target, poor communities, right? They target, like you were saying, how do you change your credit score? Like there's a joke, how do you change your credit score? You move to a different zip code.
mhm,
Right? Because, like,
yeah,
once you move to a different zip code, automatically, you're gonna start getting different credit offers, and you're gonna start getting different credit offers on different terms because you're in a higher wealth zip code, and it's one of those things that's now right in the algorithms, and zip codes make a huge difference to what kind of terms you're offered.
your zip code, and of course, it's all about how wealthy your area is,
Mhm.
but, on paper, at least, I would live, I think, something like 7 years, longer if I were to move just to a certain community in the next, like, I don't know, 15 minutes away, at
Mhm.
least I would live 7 years longer.
Yeah, the zip code, like, various forms of zip code inequality are so numerous and so severe, and access to credit's really one of the huge ones because they definitely that was one of the first things that credit scores started looking at was zip codes and where you lived. And we can talk about, right, what goes into these algorithms, which again, they're proprietary at this point and, it's secret. Um, but when we look at algorithms and what go into credit scoring, zip codes are clearly in there. And while companies can't use these protected categories anymore, so you can't use gender or race, zip codes have become a proxy for using race in these calculations. And so they do take into consideration a lot of things that basically, again, churn out credit offers that go to different markets and that give higher wealth markets great credit offers and give, like, the low income neighborhoods to, sort of just.
My recommendation to get a card with no annual fee, blah, 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 that may not be available to someone younger just starting out. They might have no choice.
Mhm.
Uh,
And the credit card, the credit cards or the credit card offers that they send to really low income areas, they'll say y they'll be sometimes you have to get a secured one, right? You have to actually send in a deposit, but they all talk about it in the way that you have to build credit, right? If you're gonna be a person in the world, you have to have credit, so start here, and again, basically a starter card, and this
Mhm.
is they'll tell that to people who are young and can't get credit or people after a bankruptcy or people who have really bad credit, right? All the people that they would call, subprime, and start here. Like, let us help you rebuild. And of course, the rebuilding process is very extractive also.
Like I said, before, you can make a lot of money off of poor people. You wouldn't think so, but, there's a lot of opportunities to take advantage because these are people that don't have a lot of options.
Yeah.
What are you gonna do? I mean, oh my gosh, when I first bought my very first house and my daughter was a baby and, we went FHA. We bought this house for 3% down.
Mhm.
House was this is gonna kill people, 37.5. $37,500 for this house, three-bedroom house, little bungalow in a very iffy neighborhood, but, in Peoria, Illinois. So we bought it with, very little down, and we borrowed the money from, our parents because we didn't even have that 3%. And, in March, we bought the house in the fall. In March, this, very, very, very ancient furnace died, and it couldn't be repaired. It was like an old converted coal burning furnace. I mean, it was this huge cast iron monster of a thing that they haven't made for generations probably. And, we had to have heat, it's March and I had a baby. We had to have heat. We didn't have any money. And so we found uh, a furnace company that let us have credit, but it was 25%.
Mhm.
We didn't even have I mean, I cannot tell you how close to the bone we were living at that point, and that 25% kept me awake at night, and I remember I would sit there with a piece of loose leaf paper, and every month I'd write down every bit of income we had,
Mhm.
wasn't much, and, all of our bills and how much they were, and I would chip away any extra penny I had at that stupid furnace bill because what are you gonna do? You have to have it. You can't just if
Yeah,
I told her, I probably just would have been like, "Not doing it. Just gonna freeze until the fall and save my money." But
right. But
that
it's a good example of how, sometimes again, with the best budgeting and, it's not people's fault that they have emergencies.
yeah.
So again, if we had chosen at some points in time, like 1974, instead of just giving people credit as a civil right to give people health care, maybe that would have helped, right? Or
I would
give
hope
people something else that maybe didn't just give them the opportunity to be in debt, which as we've, talked about is extremely, profitable and extremely expensive to be in debt because of all of the fees associated with it and all of the fines and, how much you end up paying for an original debt is crazy. I think we looked at payday lenders like for an original debt of like $300. On average, most people ended up paying 1,200. So it's extremely expensive to borrow money in that way.
and I have to say, you'll always hear someone saying, "Well, they agreed to it," and they'll say,
Mhm,
exploitative loans, and they'll also say it about student loans because we all have heard stories of
mhm,
people who after 10 years, of diligently paying for 10 years, they owe more than they originally borrowed, and you've always got somebody saying like, "Well, these kids are stupid for doing this." Well, they're not stupid. Many of them know exactly what they're getting into, but that's the only way they can get an education, and they want to do something that requires an education.
yep,
So, it's not a matter of being stupid, and I think most people who go to these payday loans, that they know they're getting hosed. They're not unaware of it, but again,
they
um,
the option.
sometimes they don't have an option. Like, do you wanna eat or not?
Mhm. Yeah, I think that's one of the things, and I say everybody, I give a little shout out to Debt Collective. They are on Substack. Debt Collective, has all kinds of information about debt and the reasons that people get in debt and what we can do to help people who are in debt. But the idea that most of the time that people are in debt, it's just because they needed some basics to live, because they had some type of emergency, and then they get in these cycles where you can't pay it back because the terms are too great. And I'll say that there are a cascade, just like there's a cascade of fees out there, there's a cascade of judicial opinions and courts saying, well, it was there in the fine print and like, why didn't you read it? And
Even if you read it, if your kids are hungry and your rent is due and you just
Right.
want money, you're gonna sign it. And all of us who think like, "I'm so good with money, that would never happen to me." Oh, yeah, I hope you find out how wrong you could be.
Exactly. Someone said, "I had a similar experience with a blown head gasket on my motor as a young mom. I was referred to a mechanic that took payments who charged 30% interest. Didn't see any other options, likely overpaid. Total was $3,000. Yep. So you think of, I mean, again, they say it's expensive, right, to not have money, and it really is because you end up paying these rates that are incredibly high. The thing that is, I mean, terrible slash ironic slash I don't even know what the right descriptor is, but most of this is premised, right? The credit card companies say that charging these fees are charging these interest rates. It's okay because they're very high risk, right? This high risk of default. But it's funny when you look at like really high end lending. So people who are trying to get money for a yacht or a plane or something like that. They don't do paperwork, they don't do risk. There could be really risky things like one of the really popular forms of lending in Silicon Valley is pre-IPO. They want to basically borrow off of pre-IPO stock. And it's incredibly high risk and banks are like, I'm sure that will work out well. Like, I'm sure that will be fine. And so, obviously some people's risk is different than other people's risk and, monetized differently.
I read about a case, and I won't give the name of the person because I would not want to embarrass him, but he had borrowed many, many millions from, I'm not gonna say this wrong, Deutsche Bank,
Yeah.
um, and that's a very vast bank, I'm sure you know, but for anybody who doesn't know, it's a vast, vast bank, and they've got so many different departments that they don't speak to each other. It turns out this little part of the bank had loaned this man many millions, and this part of the bank had loaned this man very many millions.
Yeah.
Like, okay, we have to stop giving this guy all these millions. They're like, wait, we gave him some too. What? You too? Talk to each other.
Yeah.
And this particular person said, you know what? You got to give me more credit because you're in so deep now that if you don't give me credit, that I can get out of this tight spot, um, you're going to lose all this money.
Yeah.
And they actually agreed with that. And again, I wouldn't want to embarrass anybody, so I won't say who he is. I will say that he did get elected president of the United States twice, non consecutively.
It's interesting that there's like a saying that's attributed to JP Getty says if you owe $100, the bank owns you. If you owe $1,000,000, you own the bank. Right.
That it's true. It's absolutely true. And I think a lot of people, we all like to be really proud of how good we are with money. A lot of us are. I am. I'm guilty of that. But some people are proud of how they are with money, and then maybe they shouldn't be quite as proud as they are because the
Right.
people think that they would never fall for um, any of these things. They
Mhm.
just that position where they haven't had a good choice available to them.
Yeah.
And we need a little more compassion for some people who are working hard, they're doing all the right things, and we set the system up to allow them to be taken advantage of, and I hate that.
And I would say we need not just more compassion, but more regulation. But that's just
Yes,
that's just me.
yeah. Oh,
Uh,
well,
some regulation would be good too.
let's say that, yeah,
Yeah.
because if if you could actually pin somebody down and say, "Do you think it's right that this person in this desperate situation should have to pay, $6,000 after borrowing $1,000 and it just one fee after another at Cascade? I think this is really fair and right." And look at all the things that went wrong in this person's life because they were desperately trying to pay this horrific debt.
Yeah.
Most people, not all, but most people would say, "You're right. This is a really terrible injustice. We probably should have better regulations."
Yeah,
But
it's interesting. So the only arguments though, when you look at the arguments that the lending, like the payday lenders, so like the alternative financial services, their like industry group. So you look at all the arguments, they were always coming out against basically everything that, was any form of regulation that would impact them. And the arguments that they use are always just they're so outrageous because it's always, freedom. People should have freedom to get themselves into debt. And why are we trying to be paternalistic and regulate and like don't let some regulator tell you what to do? Like enjoy freedom. It's the American way. And it's just, I mean, the freedom to be crippled by debt is just an extraordinary way to frame it. And it's so disingenuous. So
Well,
I'm gonna say one more, and someone says I've had the privilege of being both educated and poor at the same time, and you can't budget your way out of poverty. I think that's exactly right. And someone's former comment too about being a young mom, I do think, and this kind of brings us back to where we started, that there is also like the burdens fall particularly hard on women in this sense if you're poor because you're more likely to be doing caretaking
mhm,
and have childcare responsibilities and trying to manage, right, the work and the budget and the childcare, which childcare expenses we all know are uh,
crazy.
outrageous. And so there's a particular burden that falls on, I think, women, especially if, women who are trying to negotiate poverty.
It is extremely common for a divorced woman, particularly if she's got children to take care of. It's very, very common for her to end up bankrupt or in a similar situation. I don't have that figure off the top of my head. You might know it, but it's really common.
Yeah,
And
I mean,
so
women, I mean, again, like in heteronormative marriages, a woman's standard of living declines significantly after divorce for the most part. I mean, obviously there are exceptions, but women tend to experience a relatively steep decline in the standard of living after divorce.
I can attest
And
to
that's like when they use credit. I mean, it's actually interesting because for all of the, again, this is a whole different topic, but for all of the talk out there about people, welfare queens and fraud and benefits, the most typical user of government assistance is a white woman who was recently divorced,
that makes sense to me. Uh,
trying to sort of get back on her feet, right? She probably has custody. She's probably trying to you know, pay for childcare while she's also trying to maybe, if not re-enter the labor market, maybe amp up the amount that she's working, and so that's actually the most typical user of benefits, and if you can't get benefits, what do you use? You use a credit card.
well, that's the only time in my life that I've had credit card debt to speak of was for
Mhm.
2 years after my divorce. Try as I might, I could not quite meet the it costs a certain amount of money. You've got your mortgage payment, maybe a car payment, you've got all the things your kids need.
Yeah.
You've got, your pay and whatever child support you get, and those numbers didn't meet up. And so every month, I was just a little bit short, and after, like, I kept trying to, like, scheme, like, "Well, maybe I can cut this, maybe I can cut that," but there was nothing to cut. There really was nothing to cut, and that is why I ultimately moved from a house that financially, I probably would have been better off staying where I was, but, I realized that, like, all it would take is for the furnace to go out or the roof to need a big repair or something like that, and I
Mhm.
so, had I known I was gonna remarry as soon as I did, I probably coulda kept that other house, but Um, I just kind of like I hung on to it for a couple of years and thought, I'm just gonna have to get out from under this because
Mhm.
it's just too much and I can't make any more money and I can't cut any other expenses. And so I ended up buying a separate house that was much, much, much smaller, the one that my son lives in today. So I mean it worked out in some ways. Probably the two houses together, what the big house was, but
But it's a hard time, it's a hard time for, women, particularly in the wake of divorce, and, maybe property division means that you got the house but then you didn't get spousal support or you got a small amount of spousal support to kind of, you know which I think I think it's one of the most insulting terms when you get rehabilitative alimony, right?
oh god.
You're gonna be rehabilitated into the labor market. So you might get you might get a small amount of support to, again, like, help you get back into paid labor, but it's a really, like, it's a difficult time. And so
I
again, a time when people are very, uh, prone to use whatever type of credit they can get.
I could think of a woman who she and her ex had 4 children and he made pretty good money. And she helped put him through college. She was always working. She did not go to college, but he did, and he kept changing his major. And but ultimately, he made very good money. But they paid for they lived for years on her little like working at Walmart or she worked at the roller rink so her kids could take free ice skating or
Yeah.
whatever. take free classes. She did all kinds of stuff like that. She babysat a little bit. So she was supplementing the family budget, but
Mhm,
she wasn't really earning much money. And then
mhm.
decided he wanted out. There
Yep,
she was with a high school diploma.
yep.
And I mean, that woman, you can just I'm not even going to go into details, but it was really bad. And meanwhile, he paid it off with plenty of money.
I mean, that was like, there's so many cases in the, I don't know, 70s, 80s where that you see divorces like that going through the courts. And this was actually why for a while, no states do it anymore, but professional degrees would become marital property because you saw so many women putting spouses through school, right? Through law school, through medical school, through something. And they did, they ate ramen, they didn't go anywhere, they, were very, very frugal, and then as soon as the husband finished medical school and started earning, they got a divorce. So of course we're trying to figure out what to do, and they've gone away from that, but it was a solution at the time to basically make the degree some form of marital property to try to pay back
Well,
that debt, right? The debt of having foregone earning opportunities and foregone, various things during that time.
I see this as a very happily married woman. Marriage can be a very, very, very bad deal for men, and I get very angry when I hear some men say that women, when they divorce a man and take half, like, no, they're keeping half. They're not taking half. They're
Right.
keeping.
Keeping
And
that. Yeah.
whether she's working outside the home or raising children, either way, she was a partner in this marriage, and I hate to see injustice of any kind, but that's particularly um, anger inducing for me when I hear about a woman just being completely, especially if I'm so grateful that I had gone back to work, even though I wasn't a lot. I did already have a job. I don't even know what would have happened to me if I had not gone back to work a few years before. I mean, probably I'd be living in a trailer somewhere or something like.
Yeah, we'll have to come back and do a whole 'nother one. I mean, I could talk about divorce forever. It's a topic of it's a topic of interest. So that's a whole 'nother day's worth of talking about.
Oh, we could do a 12-hour session, and
All right. But we're at time, so I wanna see if you had any last thoughts about credit.
I think that we have to, I would like to see people realize that, credit is a tool that everybody needs, even if you're poor, especially if you're poor, you should have access to credit and decent credit, not the type of credit where you're paying, 600% interest or something, but just ordinary credit. It used to be considered a sin in the Judeo-Christian tradition. It was literally a sin to charge interest on money.
It
Now
was.
it's completely fine. Nobody considers that to be bad at all.
Yeah.
And we need credit, but I've read accounts in, like, the Spanish Inquisition tortured people to death for even, like, suggesting that maybe it would be okay to charge a little bit of credit. I'm just kidding about that.
We got a lot of stereotypes about a lot of different types of people from, yeah, money lending. Um, yeah, so absolutely. So I'll just say as a my final thoughts on credit is that people should have equal access to low interest credit, but I think we should also be giving people other things so that they don't have to have recourse to credits as much as they do. And, I would rather see I would rather see regulation on the credit, especially like we were talking about the alternative lenders like the payday lenders and the high interest fee harvesting cards. I'd like to send them be regulated. But also, I would just like to see people not have to use them because they actually had healthcare and they
Yeah,
actually had they had universal basic income or they had the resources that they never actually needed to even go there. And I think that would
you
be
didn't
great.
even mention that medical reasons are the top reason that people go bankrupt, and that doesn't happen in most places in the world. We've done that. We don't have to do that. That's what we've chosen to do.
Do that. That's a choice. Yeah.
There's a whole big difference between someone who, gets into trouble with credit because they've gotten cancer or been in a car wreck or something like that versus somebody who just like, "I just felt like going to Hawaii for 2 weeks, and
I
so I."
get I
There's a
understand, like, that's just not the reason that most people are in debt, right? So, like,
right.
yeah. So yeah, I think we're in agreement, right? Like we should basically give people the means to live, and then people on top of that, if they want other things, they could have well regulated and low interest credit because we're just gonna I actually give someone the last word here. You can't budget your way out of poverty. I think that's like a great place to, yeah. Yep.
My version of that I'll use all the time is you cannot frugal yourself out of poverty.
Yep.
Same completely true, I think.
Yeah. And so I'm basically giving people their only option is to credit themselves out and get, obtain credit to get out of poverty. That's not going to work either.
Nope.
So,
Well,
all right. Well,
great.
thank you. And thanks everybody for being with us. We had a lot of great people and thanks for all the comments. I appreciate it. And we've got now things to add to our list, divorce and all divorce. I'm stuck on that one, but lots of other benefits and all kinds of things. So we'll be back with more.
Yeah, and if you've got an idea for a topic you'd like us to discuss, shoot either one of us, a message or just mention it after this live when I'll post it in about an hour probably. We're always looking for good ideas, so we would
Great.
love.
Absolutely. Okay. All right. Thanks,
Well,
everybody. Have a great afternoon. Hello. I am okay. What's going on with you?
Um, I'm gonna call you